All right, all right. We are ready to rock and roll. We are coming into Power Hour. It's Thursday. Is it Thursday? No, it's Wednesday. No, it's Tuesday. What's today? I thought today was Wednesday. Thursday. No, today is Tuesday. It's Tuesday afternoon, and we are looking for Power Hour on a Tuesday afternoon. So we are getting ready to trade here. I want to show you before we get started. I want to show you the strategy that we're going to be trading, and I want to show you um, yesterday's totals of what we did yesterday with this strategy. Now we're going to change it today. We're not going to do the same thing today that we did yesterday. This is a learning environment. So we're going to change things up a little bit. We're going to show you a little bit different strategy, kind of same thing, but a little bit different. All right. So yesterday we did the scalp and trail. Actually, we didn't do the scalp and trail, right? We generally do the scalp and trail, but we just did scalp this time with larger quantity. Because you remember the question that came up was, why don't we trade larger quantity size on smaller trades? And so I said, okay, let's do that. Let's example that, and I'll show you several strategies that take advantage of that. Now, remember, this is a very dangerous strategy because you lose one time, boom, it's really nasty. But the thing is that you win a lot if you're good at it. You can win a lot. I mean, a lot of times, and then the one time you lose, it wipes you out pretty nasty. So you have to do some risk and money management. We're going to talk about that here. So yesterday we did this one here. We had $1,830. That's how that turned out, doing our scalp and scalp is what I called it. Just scalp and scalp, right? We didn't do any scalp and trail. We're going to add that. We're going to go back in, do some more scalp and trail, but scalp and scalp. Now, we also bought a long call yesterday, and I just wanted to show you how that played out. The market took off, and we put in a limit order to take it off at 25%, which we did, which ended up being $225. So that was a nice day, and it turned out well for us. So let's see. We need to... How come that is running like that? That's weird. I think we're supposed to grab all these and bring these down. I think I only brought down that one. And then we need to bring these down, right? So we got that one. And then today, okay, it is Tuesday, July 16th. So we're ready to trade, and we'll come in and work on this later. But right now, yesterday we did 1830. Our goal is 669. All right, $669. Our max loss is 1339.40. So that's our risk and money management today. So we can only lose 1,339, and our goal is to make $669 today. That's a 1% return on our account of $64,000. We started in January with $10,000, and that's where we sit. So let's go out and see if we can't make $669 in this next hour. Can we do it in the next hour? Maybe, maybe not. All right, so now I want to show you the strategy that we're going to run. All right, so first of all, let me show you the strategy that we ran yesterday. Let's start there. So we've been working on the Heikin-Ashi color changeover. We do a lot of this. This is one of our favorite strategies where we look for a reversal or a continuation, but it's based on the Heikin-Ashi range bar chart switching from red to green or green to red, right? So we do a lot of that. Then we modify it, and this is what we called the auto reversal scalp strategy. Now, this is what we did yesterday. So we were looking for a reversal in the market, and it only had to move 5 ticks, right? And then that was where we were looking to get stopped out. Only for us, it was getting stopped in. So we're looking for that time in the market where the market runs, and then it flips and goes the other direction just for a split second where it stops everybody out and everybody loses their money and it pisses everybody off. But for us, that's what we're looking for. We're waiting for the market to go up, or give us that little reversal, that little pop back, the little 2-bar pull back. It's just going to get us into the market and then right back out with the limit order of 5. And that's where we're going to capture that one little piece of the market. All right. And we're just going to do a quick scalp off of that reversal where it's going to go and stop everybody else out, but it's going to stop us in and then liquidate us out with a very close limit order. Now, the reason this is dangerous is because if it doesn't move that 5 ticks to take our limit, which is really close, we're going to be using this seems to work best for me on the NASDAQ. The NASDAQ's a little bit bigger market. We're going to use the range bar 20, and we're going to trail on that order for entry. Now, this is what we did yesterday, and that's how we come up with the numbers that we did yesterday. This is the strategy that we used to make that 1830, and that was on the morning bell. All right. So this is the settings in Track and Trade. For those of you who don't have Track and Trade, I know we got some new guys in here. These are the settings in Track and Trade that allows us to automate this. All right. So it allows us to automate this. So let me show you in track. Oh, I really don't want to. That's page 34. Okay. So in Track and Trade, if you guys don't have Track and Trade, it's the software I'm using. And you can go get a copy over at trackandtrade.com. Get the live futures version. That's what you want. It's won Stocks and Commodities Annual Reader's Choice Award 7 times. And so it's a great little piece of software. I think you'll love it. And that's what we use here. You can go get your copy, get your 2-week trial, see if you like it. If you don't have to stick with it. All right, we're going to go back down to page 34. There's 3 times 3's company. 34 is where we left off. Note right here. Okay, so we were right here. So this is what we did yesterday, auto reversal scalp strategy. Now today, we're going to do basically the same thing, but we're going to do the pennant scalp strategy. All right. So there's not any difference in the settings. You'll notice that it's not any difference in the settings. If I go back and forth between the one we were doing yesterday and the one we are doing today, we're not going to change the settings. We're going to use the same exact setup. We're just going to execute it differently. Okay, so this is going to be the pennant scalp. Is considered a continuation formation or pennant scalp strategy. The continuation pennant scalp strategy assumes a continuation of the trend. So what we're going to do is we're going to look for a market that's already in a trend. All right, we're going to be looking for green bars up or red bars down. We're going to look for that little micro pullback where the high is not higher than the previous high. So we want to see higher high, higher high, higher high, lower high. All right. Now, we don't really want it to even break the previous low. We want to kind of get it to stay up above the previous low. But if it breaks the previous low, that's okay. But we want to see it turn and then continue in the trend. And we're going to capture that because we can drop the order in there. Track and Trade will grab that order, automatically place it for us. And then as the market starts to continue in the trend, it'll capture just that real quick 5 points. Now, if you get good at this, you can start to increase your quantity as you get more comfortable doing it. I would recommend you start off with small quantities first. It's a very small position size, but when you lose about 4 times more than you make. So if you're going to make $25 a piece with each one, you're going to lose $100 each time you're wrong. So we want to be very judicious about the strategy as we put it on. All right. And then, of course, once we get a little bit more sophisticated, we can do both directions. We can go long and short at the same time, which is strategy 1, the one we did yesterday, strategy 2, which is the one we're doing today. You combine them, you get this strategy here where you're going both, or what I call Lan's best of both worlds scalping strategy. All right. So we're going to take longs and shorts. Again, it gets even more dangerous because you have the opportunity of getting stopped out with a 4 times the loss of your actual entry point. All right. So let's go move this out of the way and let's watch the market and see if we can't make some money. All right. So we're going to come in here, go to the trading tab, and we're going to use this order right here. All right. So I've got it set as 99 to kind of set it out from everything else. If I come in here and pull it up, it's that setting that we had over in that other window. All right. Scalp and trail, or scalp and scalp is what I call it. Trail stop, 1 price bar back, limit 5. Now, I think in the settings, I did have it set here on this one. I see this, it says 1.0. I think this afternoon when I was practicing with this, I put it at 1.1. So this is a new setting to go 1-to-1 instead of 1.0. Now this one here is 1.1 on the trailing stop, but on the entry stop, I put it at 1. I had it at 1, and I decided to try 1.1. So we're going to stick with that for now. All right. So I'm going to change that up in here so it actually even says 1.1, and we're going to have a trailing stop 1.1 for entry. All right. And then we're going to have a limit of 5. Okay. So there we go. We're going to come in here and say, okay on that. Now what we're looking for is we're looking for a market that's rallying. This has got multiple higher greens. I can grab this order, come in here, and I'm going to wait, and I'm going to drop it as soon as we get a lower high. Now, what's cool about Track and Trade is you could drop it right now, and Track and Trade is going to drop that in there for you. All right. So if it goes up now and breaks a new high, we're going to just scalp that 5 ticks out, and it does that. Okay, that's a failure. We don't do it. So remember how we're always complaining when we're trying to get into a market and we're like, okay, let's get into this market. It's breaking a new high. First green candle to make a new high. Let's get in. And then we always complain. We're like, daggone it, there's those stupid scalpers who break the previous high. And then as soon as it goes up just a few ticks, they take it off and it flushes back down and stops us out. So we want to be that guy That's what we're doing with this strategy. All right. We want to be that guy. So now we need to wait for the market to go into a trend. Let's give it a little bit of a trend, and we want to see a continuation of the trend. All right. A continuation of the trend. So again, I'll pull this up just real quick right under here. This is the strategy we're doing. We're looking for a little pullback on the green bar. Of course, if it's red, we want to see the little pullback on the green bar. But right now, it's higher high, lower high, and then a continuation. And we're going to capture that 5 ticks out of there. All right, so here we come. We're just looking for it to drop lower. And I'm going to come in here, wait for it to close down. As long as it keeps going up, we don't drop it. All right, now you can drop it in here. The neat thing about this is that you can drop it. Track and trade doesn't care. You can drop it right here, and it'll drop in there. Okay, we just caught it. Okay, we caught it with a single contract. So that was $15 that we just made off of that. And we have to take into fees. I don't know what your commissions are. So the programmers have me put in there 0 because everybody has different commissions depending on how much they trade. It's not everybody has the same commissions. And so we put 0, and then you have to calculate your commissions against that. Let's figure that it was probably, let's say, I don't know, $2.50. Let's say $5. You made $10. All right. So that was that one. So that's why on this type of a strategy, you might want to go with like 3 contracts, 6 contracts, 7 contracts. So when you do that, if you have enough money, of course, you're going to make, instead of $15, you make $30. All right. So if you're going to do it and you're right, and you're right a lot, you might as well make more money. That's the point of these real tight scalping strategies, right? So we generally do a scalp and trail strategy, right? A scalp and trail strategy. So if we're going to do a scalp and trail strategy, we would add the trail to this, and then the trail would continue up in the upper trend. We'd scalp off the first one, and we can do different quantities. So what I would like to do is I've been going in with like quantity 3 or quantity 6 or quantity 7. So we go in with quantity 7. Market's not moving very strong right now. We're in power hour. I was hoping for a little bit better, stronger trending market. But we could go in with quantity 7 if the market was moving a little stronger. And then we would take 7 times 15 or 7 times 20, and that would be our scalp. And then we would drop in a trail with maybe 1 or 2. And then we just kind of let that thing trail up. And we could do that with the, I like to do that with the ATR. But we're not going to do that today. We're not going to do scalp and trail. That's something we'll add to just what we're doing today, which is just the scalping strategy. Okay, and we're gonna let's move up. Let's move up to quantity 3. Now let's move up to quantity 2. We did 1 last time. Let's do 2 this time. All right. So what we're looking for then in the market, we really want to kind of see a market that's trending up. We want to see a nice moving market that's got some steam behind it. We've got the stochastics up in the upper region, which is telling us that the market wants to roll over and come down. We've also got volume, which is lower greens. That's not good if you're trying to take a long position. You want to have higher greens. All right, higher green bars on higher green bars. We got lower green bars on upper green bars. That's divergence between volume and the market price. So you got the market price increasing, but you got volume decreasing. Oh, there we're getting a little bit of a break higher. So that's good for us. All right, so now we're going to get ready. If we can get a lower high in here, we want it to break above that lower high and not reverse, obviously. So we're going to leave it right here for a second. Let's wait till the next bar. Now, the cool thing about track and trade is you can drop track and trade in like right now, and it doesn't go until it reaches that point. And then when it reaches the point, it'll drop it in there for you. So now we have a lower high. What we want to do is we want to see this market continue up, break above the previous high, and just go up and hit our limit order, which is only 5 ticks. So it's just real easy for it to hit it. All it has to do is just continue in the trend. But this market's being really lazy right now. I wish we were having a better market. We're in power hour. Come on, guys. It's power hour. Let's go say hi to some people while we're waiting for that thing to shoot up. We got Gary Thomas coming in with his gold today. We got Michael Bruce out there coming in with the silver. Michael Bruce saying, Lan, that scalping strategy is the next best thing since sliced bread. You like that one? I made money hand over fist this morning. Keep these strategies coming. All right. This one here is a good one too, Michael. You'll really like this one. We got Kirk Schwartz coming in. Good afternoon, Kirk. And Lowdown Killer. Nice to see you. That's really good to hear, Michael Bruce. That worked out for you. All right. Oh, let's see. Let's get me out of the way here. Let's get me up here. All right, I don't like what's going on here, so I'm going to exit out. Now, it doesn't mean it's not going to go up and break that high. It just doesn't, not enough oomph in there. I think this works better on the morning bell time frame because the market has a tendency to pop a little bit more. It's being pretty lazy right now. It's 1:15 for me. Market closes in 45 minutes. Now, order would be right here to break above that. I don't know if it would have jumped down there and would have filled or not. We're getting the higher high that we're looking for. It just wasn't as energized as I wanted to see. Would it have done it? Ugh. It would have filled our order right there and then backed off. Our stop would have been down here. Boy, it's just being lazy. Come on, market. Let's go look at a different market. That's the NASDAQ. Oh, these are all the NASDAQ, all different time frames on the NASDAQ. Let's go up to our, this is my scalp and scalp. I don't have the other markets in here. So for today, we're just looking at this market, I guess. That's the 1 minute bars. I like the 20. I like this chart. Been having really good luck with this chart. The 20 on the NASDAQ. This is one we generally trade. So this is one I want to kind of stick with. But we need a little bit more energized market. I want to see this thing move a little stronger. We might just be sitting here for a little while. See if something doesn't pick up. What's our news today? Let's go refresh that. Impact. Let's go impact 2. This morning at 6 a.m. we had retail sales. Forecast was 0.1. It came in at 0. I don't know if that's good or bad. I think that's month over month. That's not good. I expected to be 0.1 and it was 0. Something to move this market. Okay, well, we'll take the downtrend. We don't mind. We don't mind the downtrend. We'll come in here and we'll wait for a little pullback on the downtrend and then a continuation of the trend. The other one was looking for the reversal, right? So we were playing the reversal each time. This time we're going to just trade the continuation. And then of course you can trade both, and that gets a little bit crazy. Trade both. Okay, there we go. So now if that thing will continue down and break up below a new low, it only has to go 5 ticks. There it goes. We're filled and we're out. Oh, and that didn't give us any money at all. What was wrong with that one? We lost $2.50 on it. We got some bad slippage on that one. This market's not being happy. I'll have to wait and try again. Wait and try again. You can see the setup, though. You can see it's that little pennant formation where we got to, like that, right there. And then it came down. We just didn't have good follow through. And I think what I'm going to do is I'm going to work on this, because when you're wrong, it's 1 bar back. And that sometimes is a lot of money. It's like 4 times your loss. So there we go again. Let's see if it can break a new low. There we go. Okay, so we got 22.15. So we're up $55. All right. So what are we going to do now? We're up 55. Lowdown Kill is asking why I don't trade the softs. Because you have to pay an extra fee. I got a vendetta, and it's not a very good thing. It's just I love the soft. I used to love the softs. My favorite thing was orange juice and cocoa and coffee. I used to trade those all the time. I even traded rough rice a little bit and cotton. I had a client who was a cotton farmer, and we'd trade cotton all the time. But that's when it was under the New York Cotton and Softs Exchange, the New York Exchange. And those guys sold out to ICE. And ICE is from European company. And ICE came in and bought them out and took all the softs electronic. And I was all excited. I was like, hey, this ICE company is pretty cool, because they came out, they bought all of them up, and then they made everything free. All the data was free. Access to the data was free. You could get ICE through, everything was free. There was no charge for anything. And it was really cool for about a year. And I was just like all on board, bringing everybody into ICE. And we're like, hey, this is all electronic trading. We're now, it's really cool. We have, this cool new ICE thing, and let's all trade ICE, and we can all trade the softs, and that's really cool. And then suddenly, it's like overnight, they're like, well, now that we've cornered the market on the softs, the only people we want to deal with are the professionals. And bam, they started charging all this money for everything. And I was like, what the heck? That's the dirtiest trick I ever saw. I'm not going to sit out here and bring people over to you guys, make you a whole bunch of money. What are you, rotten bums? So I really don't like the ICE exchange anymore, where I used to be a big fan of them. I hate them now. And I refuse to bring them clients. And so they came in and they destroyed the New York exchange that had been there forever, took it electronic, told everybody that they were going to make it all free. And then after a year, they turned and destroyed the whole market and charged everybody a whole bunch of money. And I just hate them. I hate people like that come in and destroy old, that New York exchange been around forever. They had black and white pictures of it. If you can imagine, that's how old it is. And then ICE comes in and destroys it. So I'm really upset at them, and I will refuse to bring them clients. That's my own little pet peeve. And yeah, that's why I don't trade the softs anymore. It's just my thing. I got a vendetta against them. That's all. Don't let my bad attitude influence you. If you want to go trade ICE and you like to trade the softs, you should do it. Don't let my bad attitude stop you. It's just my own bad attitude. That's all. And that's why I don't promote them. Not that I don't love them. I certainly do, and used to love them a lot. They used to be one of my favorite things to trade because they're volatile and they would move. One of my best trades I ever made was on cocoa. I think I told you guys that story. All right, Michael, this is where we would take this reversal right here if we were going to do the reversal strategy, but we're not. We're going to do the continuation strategy today and see if we can't have a little bit better luck with the continuation. Well, we have good luck with the reversal strategy too, but we're just going to do the continuation strategy today. So I want to see if we can't. And last time, last time we did one. We had a loser in there. I don't know what happened there. I think the slippage was bad on that one. And then we had a winner with 2. So now we're going to scale up. We're going to go to 3. Okay, so this is this is our little ABC pattern, isn't it? So if we were looking for a continuation of the downtrend, but this pattern that we're doing now, this strategy it's not the ABC pattern. All right. It's a continuation of the green. We don't want that bar to go red. If it goes red, it invalidates. We want a strong market. And or vice versa. If you're trading it to the downside, right? You can trade this upside down too. This is just the green version. So we want it to stay green and then just give a little pullback and a continuation of the uptrend. So this little whipsaw stuff here is what that attempts to keep you out of. Because if it now starts to go sideways and you start getting a whole bunch of this kind of stuff, that'll kill you, because you'll get hit 2 or 3 times in a row. You're done. Especially if you're doing large quantities like 7 or 14, you start doing 20, 30 quantities, it's going to kill you. So to use that as a filter, right? It can only be green, lower green. It's got to stay green. If it ever goes red, you can't take it on this strategy. It's on this strategy. So now what we have to do is we have to wait for a trend to ensue, and then we need a continuation of the trend. And the bars can't turn colors. It's got to stay the color. It's got to stay. So for green, the bar has to stay green. If it turns and goes red, you have to cancel it. All right, here we go. Let's get ready. Are we going to get a lower high? And then if it turns around and goes red, you just cancel it out, right? We only want it if it's going to continue in the trend. But we need to have a lower high. As long as it's making higher highs, we can't drop in there. We have to wait. Need a little flag formation with a little green pennant. That's what we're looking for. They have a really high success rate. Doesn't mean they always succeed, but they have a really high success rate. Come on, give us one. Just a little drop back and then a continuation. There we go. All right. Now, if it'll break above that high, if that bar goes red, we cancel. Now, these are all open orders. If it gets hit down here, if it comes down and touches that order, it won't fill it. It's got to fill this order first. So it's got to break a new high. And then it only has to go up 5 ticks. There it goes. We're filled. Pop up 5 ticks. Come on, you can do 5 ticks. Sometimes if it doesn't just immediately go in my favor and it starts to look like it's going to back off, I just get out. I just hit exit because the loss on these things is too much. Took too much. The loss on these things if it falls back is nasty. I mean, that was already nasty. Made us lose $20. Now we're down. This market just didn't want to follow through. Doesn't mean it won't follow through, but I was getting nervous. It was sitting there too long. Ooh, see, we'd have been stopped out right there with a bigger loss. We'd have been stopped out with a much larger loss at that point. This market's just not good. We got lower volume. The volume is very important to watch on this. Watch the volume profile. If we're not getting increasing volume, green volume with increasing volume, that's not a good sign. Now we should be for the downside, we should be increasing red bars while we're getting increasing down bars. Okay, so we can play the downside now. Now we got hit with three losses. That was nasty. We need a better market. Okay, come on. Ooh, now look at it drop. That goes along really good with our Sunday school lesson today, I guess. I'll give you my Sunday school lesson right now. Markets generally take the escalator up and the elevator down. So this is actually a really good strategy to the downside because markets have a tendency to fall faster than they rise. All right. Come on. Okay, there's our signal. Come on. We just need a little continuation formation. Come on, you can drop up in there. That would be nice if it would give us one more bar up in there. Then that order could pop up in there a little tighter. Doesn't want to do it. Doesn't want to continue for us. Come on. Look at the volume on that bar. A lot of volume going on in there. It's just not going anywhere. It's just staying right at that price, bouncing back and forth. It's going to go green. Yeah, it's out. Exit. All right. Wimpy market. We could stay in there if we wanted to. We could drop it in there. We still have that lower price. That bar wants to go green. So that would have been the trailing stop one. We would have just been, if we'd have been doing the trailing stop one, that would have taken it to the long side and had a stop of 5. Looks like it might have even gone 5 ticks. So right there, that would have executed enter, and we'd be looking for it to, yeah, it's going green, exit. We're not getting any follow through on any of these, are we? Market's pretty much dead here at 1:30 on a Tuesday afternoon. So much for power hour. Let's go with, last one was 3. Let's go with 6. See if we can't get a little bit. We got to, shouldn't ever play against your lost money. This is where you get in trouble. It's like, oh, I'm down this much. If I do 6 of them now, I'll get all my money back. Plus make some money. It's called danger. Danger, danger, Will Robinson. Come on. Give us a little pullback. If it'll drop back below that high right there, you can drop this order in there, and track and trade will just hold it up there until it hits the part. That didn't work. Come on. See, we hold it up there. No, it dropped again. I don't like it. Let's wait. There we go. Okay. Okay, now it's just got to break above the high and go 5 ticks. Now, one of the things that you want to be mindful of, David Duty points out that if it's got a high like right here, and that blue line is above the high, it's straddling that high, he doesn't like to do this strategy because he says that's like a stop sign there. Oh, it's going red, green again, red. It's no continuation. Now we're doing the trailing down on the reds. Not getting any lower highs and any follow through. You got to have a pretty active market for this strategy. Maybe we go back to what we were doing yesterday, right? Right, Michael Bruce, where we just trail the reversal. This market seems to be doing a lot better on the reversals, not the follow through. Okay, so we're looking for the downside. We look for a little pullback and then some follow through. Okay, there we go. All right, let's see if it'll break a new low. Our limit order is inside of there, so we're good there. If the limit order is on the outside of there and the entry order is on the inside, we wouldn't want to take it. So it might come down and touch this and then retrace. But where it's got this is beyond, we can take it. Come on, give us a little follow through. Boy, this market's quiet and dead today, isn't it? All right, cancel, exit that one. If we were doing the reversals, I think we'd have been doing a lot better. Should we switch up the strategy? I don't want to switch up the strategy midstream. We're trying to practice this one. Come on. Okay. Now, the problem with that is, see that's how it straddles that right there. That's not supposed to do that. Not supposed to take that position right there. But we'll see. We're going to do it anyway. If it breaks that low, then you have to throw it away again. Come on. Follow through. Follow through. We haven't got any follow through. Look at that. No follow through here. No follow through here. No follow through here. And are we going to get no follow through here? That's crazy. Look at that. That's one. That's 1, 2, 3, 4, 5 failures in a row. Continue the current. See the results. Sometimes it just doesn't work. It's true. It's true. 5 failures in a row. We're just practicing this strategy. We don't want to change it up midstream. I think Kirk's right. We'll just keep seeing what happens here. Stick with our strategy for now. Hey, Mark, it's good to see you. Glad you could make it. We're trying a new strategy, and we're trying to stick. There we go. We can. Oh, yeah, we got it. Okay, follow through. Come on, buddy. Push it up there. Break above that high. You can do it. We got it. All right. So 3 contracts. That brings us back into the green. Let's wait and see if we get a little bit of a pullback. We're just doing small quantities. We started with 1, we started with 2, or we started with 3. For those of you guys who are new, we're trying a new strategy. Well, not a new strategy, but a different strategy. Trying this strategy. It's called the pennant scalp strategy. And we're looking for a lower high, and then we drop in our auto trailing stop, and then we take off. We just do a quick 5-tick scalp. All right. And then we have a trailing stop, 1 price bar back. So we're just scalping. That's the settings in track and trade. So there's actually many versions of this. Obviously, we got lots of different versions of this same strategy in here. So we're going to kind of work on all these. But right now, we're just working on this one right here. All right. Very simple continuation pennant formation. All right. Oh, look, there was another one right there. I don't know if we'd have made money on it or not. So we're on 3 right now. So we had a successful 3. So we're going to go to, let's go to 4. We're going to keep scaling up 1. Okay. Now we're not gonna go on red bars. It's got to be, for this strategy, we're just going to go green. It's got to be a green trend. This is another strategy. This is the one we were doing yesterday. We go red bars and then a reversal. But right now we're just looking for a continuation formation. So it's got to be green high with a lower green high, and then look for a continuation. So we drop our little order in here and we just wait until we get that. All right, so we need the market to prove that it's in a little bit of a trend. It's seeming to be a little bit more trendy right now. We got 20 minutes till the market closes. The market's just been real quiet right now, so we've been struggling a little bit. Okay, I don't want to see this bar go red. So a continuation would be a break above the previous high. So that's what we're playing, but just a very small scalp. Yep, it's gone red, so we got to go exit. And then we'll play to the downside now. Scoot this up here. Let's bring these down a little bit. It'll give us a little bit more room. All right. So we're just going to play the pennant formations. Okay, so now we need a little pullback. We need a higher low. I get it flush. You can trade the reversals. That's what we did yesterday. Today, we're just trading the continuation. Now, this worked really good for me this morning. I was working on it this morning, and I really, the market was a little bit more active. Worked really well. Not having so much luck today, though. Okay, there we go. All right, see if we can break a new low. And all it has to do is just pop past it 5 ticks. And if that bar goes green, we cancel. We need red increasing volume. See the volume's increasing. That's good for us. We need increasing volume on the red bars. Red increasing volume. Come on, push it down there. Break that low and go 5 ticks. Oh, it jumped to the next one. We need it to go. There we go. We got it. Okay. So we're up $135 now. That was scary. Didn't feel like I really wanted to go. I thought we were going to miss it. I thought I was going to fill our order and then not continue. We could drop another one in there because that's still Same thing right there, right? Till we go green. We're still in a downtrend. Not being very aggressive, is it? All right. Looks like it's going. Is it going to go green? Got a green volume bar. Still red. We're trying to come back down. No, it wants to go up. All right, exit. Okay, now we're going to play it to the continuation of the green side. Now we just need a little pullback. Now, if the current market price pulls back below the previous bar's high, you could drop it in there and it'll drop in at the high of the bar. You have to kind of play with that, see if that's something you want to do. I like to wait for it to give a little bit better signal than that, but you could do that. See, we could drop. That's not the way I wanted to do it. Okay. So the reversal would have caught a nice one on there. Well, I don't know, because that reversal had that little tiny clearing bar. All right, there we go. Now we got a bar that's working on a lower high. Now we need to go up and break the previous high by 5 ticks. So let me make that a little bigger so you guys can see it a little better. Okay, now remember, this is an OCO. So all these orders are open orders, and they all contingent on this order right here. And it's an auto-trailing stop. Oh, that's a red bar. Are we going to let it go up and break above the red bar? Breaking the law, breaking the rules. Come on, pop up there. We're done. Take it off. Red bars. We don't want red bars. We want green to green. Lower highs on green bars. Doesn't mean you can't trail back on the little red pullbacks. You can. That's just a different strategy. It's not what we're playing today. That would be the reversal strategy. We're looking for the continuation formation because those red bars show that the market's changed direction, right? That's just a counter trend to the uptrend. And we'll oftentimes play that. That's what we look for on those little ABC patterns, right? We like those. And we could scalp those. That's not a bad place to scalp. But this market's so weak. When we start getting those little topping tails, bottoming tails bars, a couple of them in a row, I don't trust the market anymore. I don't trust it to move far enough. There's no volume. Look at the volume's gone. Okay, so it broke below that little wedge pattern right there. Had another little wedge pattern right there. Broke out the bottom. Okay, let's see if it's going to continue. Got a lower low. We need a higher low. Still lower low. We need a higher low. Did we do 4 last time? So we're on 5 now, aren't we? Okay, is that going to be a green bar? It's a red bar. Okay. If you do the martingale, you guys are familiar with the martingale? Martingale says that what you should do is you should always start with 1. So if you exit the chart, we should always start on a winning trade. We had a winning trade, we start with 1. So now we come in and we do this with a single. And then if we lose on the single, the next one we go with 2. All right. If we lose on that one, the next one we go, well, martingale would double it. So you go to 4. All right. But you go to 3, but you just keep increasing until you have the winner that pays for all your losers. That's martingale. And so you always start with 1, and you have a loser, you go to 2. Have a loser, you go to 3. Have a loser, go to 4. That's martingale. You could do that. We could do that. It's not a bad idea. Okay, there's my alarm. Market closes in 15 minutes. So if we martingale, we should be starting with 1 contract each time we start over. The only time we increase our quantity is if we're in a drawdown on losses. That's your risk and money management side of it. Okay, see, if we were just trading the reversals like we were doing yesterday, we'd have taken a long position here and we'd have taken a short position here. We'd have made winners on both of those. Of course, we'd have probably got chopped up right in here. So this one kept us from getting chopped up, but it also missed these 2 opportunities. That's why we moved to the next level. Next time, we'll move to the next level where we do the best of both worlds and we'll play both sides. But that's not what we're doing today. We're just practicing this one side. Okay, there we go. Come on, break it, buddy, break it. There we go. We got it. Okay, there was another one. Now that was a single. So we just keep doing singles till we lose. And then if we're going to do martingale, we keep doing singles till we lose. And that's when we start doubling up. Because the probabilities of you losing like 2, 3, 4, 5 times in a row, if you stick to this thing, is pretty low. Pretty low. Okay, now let's see if it's going to make another low. Okay, there we popped up. Come on, 5 ticks down. That's all you have to do is 5 down. 5 down. It's not going to do it. We're going to get stopped out. We're going to get stopped out. I'm just going to pull it off. No reason to let it go all the way back and take away the entire amount of money. Okay, so now we got to, if we're martingale, we're going to do 2 this time because we just took a loss. The one thing I changed was see, this is our settings in here. See this? See how that says 1.0 here on the price bars back? I changed that to 1.1. So that's the difference between what I've got published here in this little booklet and what we're trading. See? There's what's in the software. So I'm actually doing 1.1 right here. Now that means one price bar and 1 minimum move. So it's not holding it exactly at the high or exactly at the low. It's 1 minimum move above or below. That's what the 0.1 means. Okay, we need continuation. These bars just aren't long enough, are they, to give us that continuation? I think the reversals would have been pretty good today. You do martingale on the reversals too, Michael Bruce. Okay. That and failed to follow through. Well, this market's just being too quiet, even for 5 ticks. Oh, there's our 10-second or 10-minute mark right there. Did you see it? You see the market jump like crazy? Always does that at 10 minutes. I think that the quant systems shut off their computers at 10 minutes too. I think that's the quants being shut off. Either shut off or turned on. Maybe they want to trade the last 10 minutes. I don't know. Oh, look, there was our opportunity right there. We missed it. It's just going too fast. I didn't see it. Okay, lower high, lower high. Give us a lower high. Come on, give us a chance to get in here and play. If it pulls back like that below the previous low, you can drop it in there. It'll play off that previous low like that. See? Okay, I've got the next bar. Now we just need it to go up, break that high. Continuation. You're like, Lan, it can't go any higher than that. It'll never go higher than that. Right when you think a market can't go any higher, that's when it goes higher. Right when you think it can't go any lower, that's when it goes lower. But it doesn't matter. If it doesn't go higher, we're not in the market, and it doesn't cost us anything to put this order out there. So there it is. We just got it. Okay, so that was 2. So now we go back to 1 again. If we're doing martingale, wait for the next opportunity. Still on a rise. Just wait for the next little pullback. Okay, there's another one. Back to quantity 1. Now, you don't have to always drop back to quantity 1. If you got a bigger account and you're more aggressive, you can start with quantity 5 and say, okay, I'm all going to start with 5, and then if I lose, I'm going to go to 10, and then you win it, you go back to quantity 5. So you could have 5 be your starting point, or 2 be your starting point, or 3 be your starting point. You don't have to always start at 1. It just depends on the size of your account and the size of your cojones. It all comes down to the size of your cojones. Is cojones a bad word? Do I have to now go confess to Amazon, YouTube, that I said cojones? Okay, we just made another one. There's another $20. Now remember, you have to take your commissions and fees off of there. So I don't know what they are. Maybe let's just say $5. You're making $15 each time. So we're up about $150 minus commissions and fees. So it doesn't have to move very far, and you can use larger quantity. I mean, what size cojones do you have? You might want to just come in here and say, well, Lan, I'm just going to put in here 14. Breaks my rules. I can't do 14. I've only got, in this account, I've only got 11,000. So we can only do, let's do 10. Oh, it's gone red. Can't put it in anyway. Of course, you know, Murphy's Law says that the minute you decide that you want to put 10 in because you're having such good luck and you're making such good money and you're like, I'm going to put in 10, that's when you get hit. That's Murphy's Law. Murphy's Law will hit you when you put in your big number. You know what? We could stop right now with $150, $150 in an hour's worth of work, and not even in a great market. That's good money. You can't complain about $150 an hour. All right. We've been pretty conservative. We've been pretty careful. Right? Market closed in 5 minutes. We drop that in there. Okay, did we get it? We did it. Had slippage on it. We only got half our money, but one more break. Come on. Got it. All right. So we're up $185. You want to try one more? I don't. I'm happy with my 185. Why are you putting it in then? Well, because got another. Now we're up over $200. All right. That's good. Let's go pull up our spreadsheet. Can't complain. Over $200. Did we meet our goal? No, we didn't meet our goal today. If we'd have had our cojones on and we'd have tied in 14 contracts, we'd have met our goal, but we didn't. We were being careful. So can't complain about $185. We're going to put in here $185. Now remember, you got to subtract your commissions and fees out of this. But we didn't make our 671 was our goal for today. We only made $185, but I'm not going to complain about that. We're going to come in here and make a new note, and we're going to say this was our scalp and scalp, pennant, continuation, formation, power hour. We practiced our, what was it? No, I forgot the name of that strategy I was telling you. Martingale. We practiced our martingale risk management strategy. Turned out well. Do that some more. All right, there we go. So $185 today. Today's Tuesday. Yesterday was a green day. That one that one was a good green day. We had a good green day. This one here was a nasty day. Don't do that. I mean, we're lucky to get it back. This was a total, we're lucky to get that back. And so 185. That was good. We feel good about both of those. We traded options yesterday. We didn't trade any options today because we just did the afternoon session in here. So this was still green. So we get to come in here and we get to fill that with green. And that was a big day. That was the biggest day of the year. So we get to do dark green. Biggest day of the year. Better make this white. And then this one is a small green day. Still green. Nothing wrong with that. Small green days are good eating too. We didn't hit our goal. Small green day. Okay. Oh, none of these are all light greens. We haven't got any. We didn't hit our goal on any of these days except for, the 15th we did. And that was our biggest green day. So we got lots of small green days. That's okay. Small green days are good, especially when we've been having a little bit less than great momentum and follow through. So where are we at here? Options were up $500 this month. Off hour futures, that doesn't count. We're down 4,000 because of that nasty thing. We're up 6,000 because of that nasty thing. So that really brought us back to 232, which probably just zero that out because that was just a nasty day. So we're up 2,809 on the month. Our monthly goal is 7,000, so we're short by $5,000. Not having the best of Julys. We had a really good May, 32,000. 32,000 in May. 6,000 in June. Can't complain about that. Still lots of options that went on in there. And then July, few options in here. Doing a little bit more scalping. So, all right, guys, that's it. I gave you my Sunday school lesson. So if you have any questions, let me know. Hopefully you guys had some good luck trading this strategy here yourself. And I will one more time pull up that settings that I had for those of you who are saying, what were those settings, Lan? What were those settings? There they are. Those are the settings that I was using in Track and Trade for this particular strategy. You just drop it above, you drop it below, depending on where the market's at the time. And it'll drop in there. Track and Trade will automatically start to trade at that point for you. You just sit back and let it go. All right, guys. Tomorrow morning, 7:25 my time, 9:30 in the morning Eastern time. We will see you for the market opening bell, and we will maybe try the next set of strategies. We'll do both. All right. We'll do Lan's best of both worlds. All right. We'll see you tomorrow, guys.